The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour, and this is the October 4th edition, and Friday, I'm here Monday through Friday, 11 o'clock till noon, followed 2 hours. Introduction, Steve Rose, so you had Steve and Tom, great shows, of course, and straight after me you've got let's see, that's right, Friday, of course, you got Nico and Paige. And we got programs all the way. I mean, this is just a great day to be tuned to TFNN. Dow's up 38. Woohoo! Nice to say Dow is up for a change. It was up just a tad more earlier. Now it's at plus 30. And S&P is up 467, up 27. S&P is up 450. Wow, it's struggling. A couple of things that I want to go through. We'll run the numbers right now. Dow's up 25 at 15,022. S&P is at 1684, up 6. Again, a bigger percentage. Now, this is where I look at the Dow and I say, okay, the Dow is only 30 stocks, but the impact that it can have in stalling rallies or accentuating rallies is really pervasive. The fact that you've got Apple, that was such a big part of the QQQ series, that has a different impact. You've got weighted, unweighted, you've got a whole bunch of things that go on for the different indexes. Most importantly is that generally the direction that we look at is most of the time they go in the same direction, except remember March of 2000? S&P went 3 months longer. S&P and Qs went 3 months longer than the Dow. Dow topped in January. So I'm looking at this and I'm saying, for my subscribers, I've been adding some shorts. Yes, I'm still looking at long positions, and that's fine. We've got a long position today that's up $3.7%, 3.3%. Right now, but I'm really looking at that the rollover has begun as far as I'm concerned. So we've kept our short positions. I had a question in a moment that says that the question was, let me just find it right here, my email. Hi Basil, I've been considering going long the VIX via the VXX, but when I overlay the VIX daily chart and the VXX daily chart for the last 6 months, the VIX is up 20%, while the VXX is down 40%, over 40%. That's a 40% offset, and in the wrong direction for an ETN that I thought was supposed to track the VIX. Do you know of a better ETF, ETN, that more closely tracks the VIX, looking for either a 1 times or 2 times with a hard position? Also, is this a good time to go long the VIX? A couple of questions. He does a great analysis of the Chapman Wave VIX. Let me just do that right now. No, I must finish the numbers. Gold is down 5. Friday's the day you got to watch, especially after their close, I think noon or something like that. Things can happen. I have to tell you something. I got a little sneaky suspicion, and we are trying to trade it this way, that we might see gold become a harbinger, a currency of fear next week. And it would just be a transitory thing, something that happens in a certain phase, and then you've got to be careful. And then I think gold goes on its merry way to retest those lows that we spoke about a while back. That's just my thinking. We haven't done anything yet. We've got our position set up to be able to get it if it comes in. But it's just a position. But I'm thinking out loud, and out loud says gold looks very weak on the monthly chart. So does silver. And the weekly chart, not bad. The daily chart is having different. There's an arch formation. So we'll look at that as we move on. Let me just finish the numbers. We've got gold down 6 at 13.11, silver's down 12 cents at 21.60, platinum's up 10 at 13.83. Now, high-grade copper is up 3.85. It seems to have this habit of just trading between the 332 area and the 329, 28. So we'll be watching that. Crude oil is up just a tad, up 50 cents. Bonds are down 830 seconds at 133.06. I keep saying, what's up with that? You wouldn't. Oh, I've been wanting to. I spoke about this a little while ago, and I'm going to re-emphasize it here. So, some of you know that I often talk about the three. I used to talk a lot about the three bears: VIXy, Dolly, and Bondy. That's the VIX index, the bonds, and the dollar. Out of the blue, I decided it wasn't out of the blue. It was out of the blue for listeners. I had a question about it. The dollar was not important. It was rallying. It was rallying with the Dow, with the general market, and then it was coming down. I treated that as a completely independent thing. Then I treated bonds as an independent thing. Only the VIX, to me, my focus, I dropped them off one by one. I always think of fighter pilots. You know, you got that V-shaped formation. It's just absolutely spectacularly beautiful. A V-shaped formation. And then two on the end peel off. And then the others peel off until you're left with just three. And you got that little triangle. And then two peel off and you got one. That's what I do. Remember in 2007, when the last indicator I had left in the Chapman wave methodology was the 9-period exponential moving average in the monthly chart? Well, now I'm looking at this and I'm saying, okay, I'm only down to the VIX at this particular point. I want to emphasize, and I've been talking about this for quite a while, look at your charts and do your homework on the individual charts. The relationship doesn't always have to be inverse in many aspects, in many ETFs or whatever they are. Why? Because we've seen that the Fed created something that was it was unusual. It was that rare thing that you don't ever see, and then suddenly they brought in the tapering. They brought in, first of all, you know, this whole aspect of propping up bonds and buying the bonds. But here's the other thing. When you're looking at the dollar, I've just said that each administration has propped up the dollar for a very long time. The dollar should be rallying. It's trying to rally. It's actually rallying, but it's running on quicksand. So you don't see it rallying. Keeps on coming back down. At some point it will break out to the upside, but not yet. Bonds are being propped up, so you can't really use the bonds. The only thing I can focus on is the volatility index. And then the Chapman waveform, how each sector is making, slowly but surely, making a top of significance. For instance, look at the PPA. Most of you don't even know what a PPA is. The PPA is what? It is the Aero and Defense ETF. Hit 28.55 in the daily, a peak D in the weekly, and it is a peak D already in the weekly, and the technicals are failing. And you're looking at the monthly at a peak D with a stochastic turning down, but still at 90%, and the MACD not even flattening out. That means the daily has to do all the work. It has to be the rudder. And until the daily, which is at 27.16 right now, takes out the previous low of 26.34 back on the 27th of August, it's in a consolidation. When it does that, and I expect it's going to do that, it took a long time. It's been the most beautiful, one of the fabulous sectors running. Held the 9-period exponential moving. What a technical, a thing of beauty, a picture of beauty. But look right here, failure. Now, can it have another rally? Of course, things that have another rally, but I think it's becoming less likely. So I'm watching that. One by one, key sectors are starting to pull back. Now let's go back to the story. And you've got the dollar. I'll just show you what I'm talking about right now. DXY. Here's the DXY. Trying to rally here off a trough E. Well, we don't know if it's trough E, but it'll probably be a trough E with not breaking. Yeah, this is the index itself not breaking yesterday's 79.63 low. But the monthly chart looks terrible. Looks like it really does want to test the low of 78.92 back in the week of the 1st of February. And the monthly chart broke. It broke key support last month. So it's now below the 9-period moving average. Look at the euro, EUR USD. it is trying to get to a leg C, and it'll hit resistance as soon as it gets towards 1.38, which is the monthly resistance area. I could, in fact, draw this in a green line, then a red line. These are techniques that I love to teach. Right there, it's right at resistance. So that's what I'm looking at. So putting that together, we're at an E in the daily chart. MACD and stochastic are still very strong. Boy, don't forget those indicators. And you've got a leg, possibly a leg F, unless it's recycled, in the weekly chart. But the main thing is, how does it treat the left side high bar of the week of the 1st of February at 1.37105? And we'll see soon enough. Now let's go back to our story. I said that I would look at the gold. So GCZ is pulling back. It's down 8 points I've got now. 8 points. Oh, yeah, that's right. I did update that. So it's pretty current. I was behind, but I've chosen to up my the service on the gold contract. I don't trade gold. I do trade let me just get this right here. I do trade my subscribers. We trade the GLD or another ETF that tracks gold price. So there we are. So now what we're doing is we're starting to hug the 9-period exponential moving average. The stochastic is rising. There's a positive divergence, and I'm suspecting that there really is a chance that sometime next week this is another spike. I'm only calling them spikes. I'm not calling them a concerted rally. They might be in points, but at this point I just say spikes to the upside. And I've even drawn in a while back. I drew in that double, the H that goes to an M pattern. I don't know. All I can say is that if it breaks, if gold closes underneath 1,300, this is a December contract, then we're probably going to retest the lows. But I think that's going to hold off. I think we're in a trading range with a rising low and possible rising highs on the shorter term. That's all. So I thought I'd go through that because I had questions about it. Now let's go to this chart right here. Bonds. This is the yield, 30-year. 10-year, 5-year. See the pullback from peak D? So far a high-level consolidation. If the 3.724% on the yield 30-year starts to break down and it goes anywhere below 36.02, let's call it 36, this is going to mean that bonds actually can get some traction to the upside. Until then, just a high-level consolidation. Now let's move this chart away. Let's move that chart away. And let's look. I had a question about the volatility index. This is a peak C. I'm not calling it an E. I believe everything about it says that it should be a peak C. Unless there's some kind of news out of Washington that changes things. The technicals say just be really careful. The volatility index is starting to increase, making higher highs and higher lows. On the shorter term, that's implying it's gone from a buy signal to a buy mode, and 1872 would extend. If it's today, extend leg C. If it's Monday or Tuesday, it starts leg D. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let's just look at this. Dow's up 21. S&P's up 4.57. A couple of things we'll look at. I had a question in the den. Here wanted to know about the about Tesla. Let's see, Basil, you've been right on Tesla. If one was to add to current existing Tesla position, which was bought way below, where would you first look? Thank you. So 2 things that I would keep in mind right now. Tesla is liable, if it's going to rally at all, it's going to rally from this. It made a high. It had a round number high, open, and low at 189, 188, and that was. Where was that? Ah, there it is. On the 30th, the date made the high at 194.50. So the open and the low were round numbers. And then it pulled back from 194.23. This is when we had our caller online. Travis was calling about putting on puts, which he took off for a huge position because that was the day I said it was the best risk-reward opportunity. And the next day it plummeted down. And then yesterday, of course, there was that news about the fire. And today it's trying to rally back a little bit. I suspect it can rally towards 180 to 182.25 or somewhere around there. And I'm going to draw this in right now. I suspect it's going to make a U-shaped formation. Like that. And then I think it's going to retest the low. And my suspicion, based on the chart patterns and the stochastic and MACD, is that there's a really good chance that the big test is going to come in the up channel inside track support level. If it breaks, well, it's a rising trend line, so it depends on what day. But on Monday, that'll be 159. On Tuesday, that'll be 164. So it's moving by about a little bit less than a point on the upside every day. Most importantly, if it breaks down with this particular candle that we saw yesterday, it says it should go up, but it's going to come back and test the 175 to 173 open and close of yesterday. If it takes it out and then afterwards takes out the low of yesterday of 168, round number, oh man, these round numbers, 168, I'm expecting that by the end of next week, you could see Tesla testing this area where the major support will be the green line, which is 162.68. Well, this is called 162.60. Next day, 163, and moves on like that. That's the area, and I'm going to circle up in a rectangle right here. That's the area, I think, that it will go to if it does not rally above, certainly if it doesn't rally above yesterday's high of 179.69. That's what I'm looking at short term. Now the question is, where would I add to it? I would say give it time. It needs price. It needs time. If I was looking at this and talking about the spectacular black line there, that 9-period exponential moving average, if you're looking at Tiger TV, folks, it is just so beautiful to look at when you are watching a price move that conforms to a particular moving average. In this case, the 9-period moving average. I love the 9. You can change the numbers. It doesn't matter to me. 9 is the one that I found is absolutely working the best. That 9 black line, that's what you got to monitor. And the moment it takes, and it will, takes out that 9-period exponential moving average and then closes. I didn't say it'll close. I said it'll touch it and take it out. One of these days, it's going to take it out and close under it. The moment it closes under it, all of a sudden, the 9-period exponential moving average becomes the repellent line. Instead of the propellant line, it becomes the repellent line, and it is handicapped because it is like a cable car. That line becomes the line of absolute resistance, and a little cable car sees the prices moving below it. So as a resistance line, you've got to be careful. Now, where would I get back in? I'd say, I'm just going to pick a time right now. The week of November the 1st to the next week, the early part of November, I'd be looking at Tesla as an end-of-the-year spike, possible spike, but I don't want to see it drop all that much. The candle that I'd be looking at would be between that big body candle there, between 162 and 142. It doesn't sound like it can get there up at the 176 area. It's another 30 points down or so. I think it's going to do something like that. So I would hold off. I wouldn't add to the position. Keep the call. It's a long-term holding. Tesla E up in the weekly chart, and it's going to be a peak E if once 94.50 is not traversed anytime in October. So have patience. You'll have an opportunity to enter it. Hopefully, we'll be entering it in my opening call as well. I'll be right back. Dow is down. Oh, it's up 18. S&P is up 4.41. Be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Another question I had was MELI, M-E-L-I, that is Mercado Libre Inc. Mercado Libre Inc. How's that? Trading at 139.34, up 2.26, showing strength in a market like this, having climbed while the Dow has been down. Many of the markets have been down, and it's gone from the 119, 118 area all the way to 136 in September into October. Very good sign. It shows fabulous relative strength to our markets. This is the question that I have. Let me just pull this back, because if I'm not wrong, it's an all-time high. Yep, it's an all-time high. Mercado Libre Inc. Let me see, and if I remember, that was that Spanish? Am I going to be able to type it in? Mercado Libre. I should have said in the den. Somebody tell me, but there it is. It is, in fact, reports results, second quarter, July 24th. No. America, MELI. Wheels of Commerce, or Latin America. Of course, it's Latin America. I remember that now. So in this particular case, it's showing fabulous relative strength. If you are long, I would just stay long. I am showing signs on the 120-minute chart. There's an alternative wave count that it's getting a little bit tired. So it's at 139.45. I suspect it can go about another maybe 2 points, 130, 141, getting to the 140s for the first time. Just touch that area. Then I think it's going to digest, and my digestive phase says it could come back between let's call it 141 for now. It's although 139.50 is the all-time high as we're speaking. Let's call it 141-ish to support at about 133-ish. So you could go into a 6 to a 9-point consolidation if it's going to do that. I would just stay with the stock. Now, one thing that I would say to you, if you're in it, who asked the question? Peak D. If you're in it, I would not look, first of all, I would not look to short this at all at this particular time. I would definitely look to add to this if certain conditions are met and it pulls back in a certain way, and that would be in a cup formation. It keeps making these cup formations. This is a very sharp rising soft W formation, two cups going, U-shaped patterns going up. So all I can say is that there's tremendous support, even on a very short-term basis, towards the candle of the 20th of September, 130 to 124, and that's only 3 bars away. It's not even that. We haven't finished the week. It's really 2.5 bars. So what we're looking at is tremendous strength. The high of 136.52 made on the week of the 2nd of August tells me that wick could be filled in, and that wick goes down to about 129. So I would look at it as, if you're in it, stay long. Now, the only thing I want you to add to it, because I think it's a peaky, I don't think it's recycled. So I'm going to say to you, it would not hurt right at this particular point, if you had it as a core position, to take a little bit off. Right now, reward yourself, take a little bit off to define exactly what your objective was. If this is your objective was to get to, say, leg E in the daily and leg F/C in the weekly, that's what I would do. And then that money, you could say, I'm dedicating it back into this stock because it's such a beautifully acting stock. Hope that helps you. Let's go to Mike in Ormond Beach. Hi, Mike. How are you?
Good morning, Basil. Regarding the Dow and the DXD, based on, I caught part of what you said this morning, that you're expecting the VIX on a daily basis to make a leg and a peak D yet.
Yes.
You're expecting, it looks like the dollar is going to make a spike. You know, it might not be a rally, but at least a spike up. And that. Well,
no, I don't know about the dollar. I'm saying there's a chance that gold could make a spike up.
Sorry.
Yeah.
I'm sorry. But anyway, I mean, based on that information, it looks like, you know, the markets could make at least one more good jab down. On a daily basis?
Yes. Now, let me just define what I'm looking at. Actually, let me go to this particular chart here, because the parallel is just so good at this particular point. China, this is what I show my subscribers every single day. The quintile here, there's 5 different formations. This is the Dow, 120-minute daily, come down in a beautiful down channel, started to try to form a base here. The VIX has gone to a peak D. It's doing exactly what you would expect at peak D. It's taking a little time to regenerate energy. The daily chart now, this is what I want you to show. Look at the parallels. This is day 12. Am I correct? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yep, this is day 12. I want you to double check that, because they don't always come exactly to the bottoms in this particular format. There you are. So today is day 12. Look at day 12 back. That's over there, right there on, I'll find it right now, right there. On the 20th of August, from the high of the 2nd of August at 15,658, look how the Dow was repelled from the resistance of that 9-period exponential moving average. And it was only on day 12, 13, 14, 15, 16 that it actually managed to touch it once, then drop for 2 days, made a low, and that was the low that started off this big move to the upside. Where did it go to? It went just a tad higher, 50 points higher than the 15,658 high of August the 2nd. And now look what it's done. It's gone to an alternative wave count peak G, and it started to pull back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and we haven't yet had that day of trying to touch the 9-period exponential moving average, which is at 15,164. So you can expect at any point that could happen. This is really what I'm looking at here. The MACD is still expanding and coming down. The slow stochastic is finally flattening out at 11%, but that's not oversold. That is in sell mode territory. It has to do something fabulous to break into above 20% to get back to a potential reversal. So at this particular point, it's in sell mode, the stochastic. And it's also saying that the repellent line, there's a secondary moving average that I use that is just starting to narrow a little bit and come closer to the 9 EMA. But as long as it's above the 9 EMA, it's saying, uh-oh, there's a lot of resistance. So here's what I'm doing. So now I remember you cannot follow the Dow all the time, but you do enough in the evenings or something to be able to figure out what you really want to do.
Yes.
This is the time of the most danger for a sudden spike up if one holds the inverse volatility index or anything like that. We happen to own it, but we've got a very nice profit. I'm prepared to give up some profit because I think it's worth the speed with which the VIX rises sometimes creates a higher and higher and higher base formation. That appears to have happened at this particular point. So I'm suspecting that the pattern I'm looking at says that maybe Monday, if there's no news over the weekend, but there's no bad news, there's no real good news, but no bad news, we can maybe drift up a little bit if maybe today the Dow closes with another small gain as it had just recently. If there's a sudden last hour flurry and the Dow goes to 15,024 right now, if it goes to 15,055 to 15,078, another 50 points up from here, I'd say, whoa, that's actually very good, because what happens if there's good news over the weekend and we come in on Monday morning and the futures are up 12 or 15 as they've done? I think the futures are now disappointed. They've tried it many times and it's failed. That means that I think that fund managers are taking this a lot more seriously. I think they are now more inclined to sell or short rallies, thinking we can go on a little longer. So let me answer your question. Your question really is, do I think that the Dow can have a spike, and could that spike last a little longer, or am I anticipating that the most important low of yesterday, 14,947, could be taken out?
Right.
That's kind of your question, right?
Yeah. I mean, basically, you think that we're going to go a little bit lower before we get some kind of a tradable bottom, correct?
I'm actually thinking that regardless of spikes, at least for this particular phase, I think the bear phase is confirmed, and that any rally will be very short-lived. That's what I'm thinking. And the thinking is not the action. The action will be whatever it is. My thinking, based on all the techniques that I'm using, says a maximum of 140 points to the 9-period exponential moving average, and then we start coming down. But either way, the trend, as far as I can see, in most of the indexes has turned decidedly in the weekly charts down. We are just now beginning to get the Qs and the IWM, the ones that were the last to turn, to actually give signals to say we are starting to show, like the IWM made a peak D. The MACD, well, the Dow hasn't closed, but so far the MACD is negative, but it's just the start of a negative MACD. Stochastic is now down at 77%. On balance volumes turning down. Relative strength is turning down. That's telling me the dailies going to have to lead the weekly, because the weeklies show a sign of weakness, but it is the price. Until the price of the IWM, which is at 106.91, really takes out both the low of yesterday with that Roman candle, and I suspect it will. If the IWM gets into the 106 area, real good chance it's going to test the low of 105.60. If it tests that, then there's a real good chance it's going to take out 105.24. Going step by step. And that arch formation that seems to be forming in the IWM will be clarified if the IWM doesn't, by Tuesday or Wednesday of next week, make a new high of 107.94. That'll be very impressive. I just don't think it's going to happen based on the chart formation. And the Qs, the same thing. The Qs have almost the same pattern. So if you're asking my opinion, I think we're going to make lower highs and lower lows for at least the foreseeable future. And we'll have to just see if when there's some kind of a resolution and the market sustains a really big 125-point move repeats it the second day, I might have to change my mind. But so far, that's what I'm thinking. I hope that helps you.
Yeah, well, I had the DXD, and I took a small portion of it off, and I'm still holding 2/3 of what I had purchased. So, my question pretty much was, should I keep the DXD for a little while longer?
That's a very good question. Let me talk about the DXD. This is 200% short the Dow, and it's a good vehicle, but you can see it's down 0.37 right now. The Dow is up 20, so it's not exactly 2-to-1, but it's real close. Now, what I'm looking at, this is peak C. If there's no new high in the DXD, about 34.44 today, that'll make peak C. Then I'm anticipating some kind of a spike to go to leg D above 34.44. And the stochastic's at 87%, which is like the inverse of what we were looking at with the stochastic down at the bottom. When the stochastic is above 80%, that's exactly what you want to see, and you want to see it sustained. You want to see the MACD fast-moving average, the green line, expand, which it's doing. So far, I have to believe that we will go to a leg D, but I have to tell you one other thing. In the recycle of the weekly chart of the DXD, A, B, C, D, I believe this is D. I must double-check A, B, C. Yeah, this is D in the weekly. It's leg E in the monthly. I know it might be. It's an F in the monthly. And if at any point the DXD goes above, first of all, if it goes above the high of 35.57, the high of August, the week of the 30th, that'll say 36.71 is the 9-period exponential moving average in the monthly chart. On a monthly basis, if it trades above there and closes any month above there, that'll be the first time that the DXD has traded above the 9-period moving average since September of 2011 when it went to 86.80. It was, of course, that's when the Dow really started its big move. So I'm looking at this and I'm saying, okay, if ever there was a chance that the Dow could take a breather of not just weeks, but maybe a month and a half, this is the time. And I concur. I think exactly right. You take some money off and you put it right back in, or you keep your core position. And the money you take off, you keep it, and you'll see. I can just tell you this, that if the 34.06 level that it's at right now, if it goes to 32.65, then I'm going to have to say, this could be a much bigger rally in the Dow. But if this thing holds, the DXD keeps holding like this, and if you put it together with the VIX index, which is also in peak C, a much more volatile set of movements, big percentage, down 3.28% today. If you put it together with that, the MACD is at 76, the MACD is expanding. Stochastics at 76%. I would prefer if it was at 80 for comfort, but 76 is okay. And so far, that too looks like it's going to try to make higher highs. So that's the best I can do.
Well, it's a great help, Basil. Like I said, I've got this remaining position of the DXD, and I was,
what I will suggest is don't take a loss in the remaining position. Your core position should always make you money.
Right.
Okay. Hey, thanks for calling. Always appreciate it, Mike. Good luck with it, and have a great weekend.
Yep, you too. Bye.
Thank you very much. So, folks, the Dow's attempting a rally again. It's up 38. The S&P's up 6.35. This is where I've said the sideways move. You've got to expect something. I'll be right back.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest, and Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to the Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to the Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi everyone, we're back. Dow's up 42, S&P's up 687. Yep, a little tussle going on there. The greater the words, the greater the move. In other words, just repeating something that's everybody knows is just going to have a slight movement. If there is meaningful implications, I'm only saying implications because we know that the final signing of anything takes a long time. But just the meaningful, you'll see greater moves up and down. So right now, I was asked a question about Remax. You know, I'm a little upset. Remax on the 10-minute chart has made a little mini top at 32.30. It's trading at 31.59 right now. I tell you why I'm upset, because I was just slow. I think it's a viable trade. Now, the 120 minutes says it's pulling back in leg C. I know that you need to give it time, but in my methodology, you can go from a 10-minute chart, and if you're in at the right point and the 120-minute improves, suddenly you're looking at the daily in a very strong leg A up. I'm going to see if this, it might not do it, but if it does pull back and it's an IPO 3 days old, if we can get into the 28 to 26 area, I'd prefer a quick sudden slide and then a slow move up. And if it does that, I might consider it for my subscribers as a spec. Why? Because they've got everything going for them. It's late to the show, so all the others in the area, the whole real estate area that would be close to Remax, I think they've run their course. So it leaves this one as a fresh start, and I would treat it as a spec. The moment it goes under 1 penny underneath the low of 25.40 of the 2nd of October, I'd be out. But I haven't got in. I'm just saying this is the kind of spec that if you want to play spec, this is the kind of stock that has the potential just at the moment to avoid any of the noise. But believe me, if the market does at any stage next week have another 100 point or so down in the Dow, 12 in the S&P, Remax will be pulling back, I'm pretty sure. So to answer you, I can't give you any other reason other than in the back of my mind, I think that this is my very first, my two-family property I bought a long time ago, and I've already sold it, was through Remax. I can't say it was a great experience, but that's besides the point. So now let's go to another question here. Basil, SPY going for leg F in the 10-minute. Oh, we'll do the 10-minute. Why not? This is Technical Friday. SPY, we've got right here. You got peak. You see it's a little difficult. 20. Yeah. Peak A, peak B, peak C, peak D, peak E. The 200 period exponential moving average on the 10-minute chart at 168.54. That's the magnet. It's also the level that if it goes above, it'll come back and retest. So this is a 10-minute chart. I would say almost noon Eastern time. If by 12:20 it's gone above 168.65, then you've got to consider that's peak A, B, C, D, E. It's F/ I don't know what, because this could be a gray A right here. So let me make it real simple. The question is, so this is an E. That's an E. Just do this real quickly. Oops, I don't know what I did. That's A, B, C, D, E. Cup formation. Got to be careful with the cup formation. Why? Because you're going to watch this thing right here. I would not be surprised if people are just very cautious going into the weekend. You have no idea. Look, the MACD is making the M-shaped formation that says it needs to go quite a bit higher with the price to get to the 168.54. The stochastic is fading. I'd be a little cautious right here. Just a little trading range, a little dartfish day. Quick moves up and down, but going really nowhere. Folks, stay tuned. You've got Nico and Paige coming up. My service is the opening call. Comprehensive look at the markets, just like I gave here. Go to the front page. This is a great time to get it 2 weeks free. This is really a good time to get something as comprehensive as that. I'll be back on Monday. Have a wonderful weekend, and thanks for being here.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.